KOSPI plunges 7.89%. Chip value chain reprices. Hey everyone, welcome to this explainer. I'm Lauro, and I'll be your guide today. So what happens when a totally stretched out AI rally crashes headfirst into an oversupply signal? Well, you get a brutal 7.89% plunge in the KOSPI index. Let's jump right in and do a rapid autopsy on exactly what just broke.
Even if you watch the markets every single day, seeing megacap structural selling hit with this kind of sheer velocity, it's a genuine shock to the system. But to figure out the actual anatomy of this crash, we've got to isolate the specific data points that trigger the avalanche. Let's stack them up.
First up, here's your headline devastation. The KOSPI closed down an incredible 7.89%, ending the session right around 7,648, and it barely managed to recover even a fraction of a percent off its intraday lows. But remember, an index is really just a basket. To see the true damage, we have to look at the pillars holding that basket up.
And this is where the foundation really cracked. Samsung Electronics, which is practically the absolute bedrock of the entire Korean equity market, fell a massive 9.06%. Foreign investors went on this wild 3.54 trillion won selling spree, completely contained within the electrical and electronics sector. And get this, it marks their 10th consecutive day of outflows.
Then we got the final staggering blow of the opening shock. SK Hynix absolutely plummeted, dropping 14.57% in a single trading session. Let me be clear, this wasn't just some slight de-risking or taking a little off the top. This was an aggressive, highly concentrated liquidation of the AI memory leaders.
And man, the contagion spread like wildfire. Just yesterday, the selling seemed mostly confined to the large caps. But today, the damage bled straight out into the broader market, dragging down 616 out of the 945 KOSP stocks. We watched this shockwave cascade from the semiconductor giants all the way down into the supply chain, hitting equipment makers like Wonik IPS and TechWing with 18 to 20% losses. It was brutal. But here's where things get super interesting. Watch how this builds a completely different narrative when we step back and look at the physical reality. Contrast those bleeding red tickers with the multi-trillion won concrete investments happening right this second. Korea is rolling out this massive Great Leap Forward mega project. We're literally talking about a 2,030 trillion won semiconductor cluster plan by Samsung, plus an 1,100 trillion won production plan by SK Hynix. Physical fabs, giant AI data centers, actual concrete being poured into the ground. The physical assets are expanding massively, yet the financial assets are violently repricing. So what gives?
Well, it all comes down to valuation stress. The groundwork for this epic drop was actually quietly being laid over the past 3 months. The Philadelphia Semiconductor Index surged a whopping 88% in the second quarter. That's its largest quarterly gain on record. But that parabolic move pushed its forward price-to-earnings ratio to a dangerously stressed 26 times, which is way above its 10-year average of 19. The rubber band was basically stretched to its absolute limit, just waiting to snap. All it needed was a spark. And that first hidden macro spark? It came from BlackRock. In their mid-year outlook, they downgraded broad emerging market equities to neutral. Now, because Korea had surged over 100% year-to-date, foreign fund managers immediately read this as a massive, urgent rebalancing signal. Then, that macro downgrade slammed right into a glaring contradiction in Korea's June trade data. On one hand, you've got this massive 199.5% year-over-year surge in semiconductor exports. Sounds incredibly bullish, right? But wait, look at the second data point, a critical 1.6% drop in DRAM per kilogram prices. The market completely ignored that huge export volume and just hyper-fixated on the price decline, absolutely terrified that semiconductor pricing power had just hit its peak. But the ultimate catalyst? That came overnight from the U.S. session. A Bloomberg report hit the wires suggesting that Meta is building a cloud business specifically to sell off its surplus AI computing capacity. Investors immediately read between the lines and saw a massive demand slowdown signal for AI infrastructure. The logic goes like this. If Meta has surplus capacity, then the hyperscalers are probably done buying chips for now. That headline alone sent the U.S. chip sector into a total tailspin, totally setting the stage for Korea's brutal open. Once the market actually opened lower, the invisible market mechanics took the wheel. Enter program selling. You can think of this as the automated robotic execution of massive KOSPI 200 basket trades. So institutions weren't even looking at individual company fundamentals anymore. The algorithms just mechanically dumped entire baskets of stocks all at once. The selling pressure was broad, it was structural, and it was completely independent of any single company's news or performance.
And the velocity of the selling became so extreme that it actually triggered a KOSPI sell-side sidecar. At 9:07 a.m., KOSPI 200 futures fell past -6%. Now, when futures drop 5% or more and hold there for a minute, the exchange steps in and forces a mandatory 5-minute halt on program sale orders, really just to try and slow the bleeding. The KOSTAG even triggered its own sidecar a bit later in the afternoon.
But despite that 5-minute timeout, a massive 2.73 trillion won in program selling flooded the market by the closing bell. Because this physical stock dumping was moving so much faster than the futures market, it heavily distorted the market's baseline math. It just proves that sheer raw panic was driving the entire session.
Okay, now here is where we really need to deconstruct what the smartest money in the room was doing. Foreign investors aggressively sold 4.40 trillion won in physical cash stocks today. But if you look at the other side of their ledger, they quietly bought up 10,160 KOSPI 200 index futures contracts. So they're dumping the cash, but buying the futures. What's going on?
Well, here is the brilliant play. Cash equities require local custody and taxes, which can be a headache. Futures, on the other hand, offer the exact same directional exposure, but through a much lighter, simpler structure. By buying up those futures, foreign investors notionally covered 72% of the cash they just sold, meaning this wasn't a total exodus from Korea at all. It was actually a carefully calculated synthetic rebalance. Furthermore, the short-selling data reveals something absolutely crucial. The short-selling ratio for the KOSPI today was surprisingly low, sitting at just 2.86%. That's actually below the June daily average. For SK Hynix, it was literally less than 1%. This means today's absolute bloodbath was driven almost entirely by the liquidation of actual existing holdings, not by speculative short sellers piling on for a quick buck. And because there are so few shorts that actually need to cover, a quick, explosive, short squeeze rebound is highly unlikely in the near term. So we are left with a massive, critical question. Is this foreign rotation a permanent exit or just a strategic rebalance? The KOSPI closed just a fraction above its intraday low of 7,616. Whether that support level holds on the inevitable retest won't just dictate tomorrow's trading, it's going to define the next era of the entire AI chip cycle. If you want to stay ahead of these massive institutional shifts before the New York market even opens, be sure to hit subscribe. Thanks for joining me on this explainer, and I'll see you next time.